Our joining us now to discuss is Noelle Acheson, Head of Market Insights at Genesis Global Trading, a CoinDesk sister company. Welcome there, Noelle.
With you.
Great to have you as always. So Scott Minerd's price predictions probably tell us that we should probably take predictions with a grain of salt. Nonetheless, I'd like to hear your BTC price forecast.
I loved your take on that. I thought that was so funny that you heard me laughing there. I must say that all these are my opinions, not those of my employer, and nothing I say, of course, is investment advice. In terms of where the price is going, I can't actually say. I don't know. We could go lower from here, but all of the accumulation that we've been talking about now for months is priming the market for a surge when new investors come in. When that will be, that we really don't know, because it does very much still, in spite of the fundamentals of Bitcoin becoming more apparent day by day, it does still depend on macro sentiment, which, as we are seeing today, is still somewhat shaken.
Yep. You don't know. That's a humbling, comment considering, Minerd, it could be anywhere between $8,000 to $600. But what are some of your favorite indicators?
That's definitely a range, isn't it?
Yeah.
Well, you know what they say, Christine? If you're going to predict often, right?
Yeah. Well, what are some of your indicators, your favorite indicators, Noelle?
Oh, there's so many of them. I love that question. One thing that I've been looking at is the correlation between Bitcoin and other crypto assets, as well as the correlations between Bitcoin and traditional assets. And they tell very different stories. The correlation between Bitcoin and traditional assets, this is something that we've talked about before. I know you've certainly reported on it, has been very high. Earlier this year, it reached an all-time high. In fact, early May, it reached an all-time high, because investors are increasingly treating Bitcoin as a risk asset. It is indeed a risk asset, let's face it, it's highly volatile. And the more investors that hold Bitcoin in their risk portfolios as a diversifier, the more it is going to behave like a risk asset. So when risk sentiment is negative, when investors are de-risking, then Bitcoin does get flushed out along with many of the other risk assets that they hold. This is the reason for the increase in the correlation. And this goes back to the increasing participation of institutions in the market. We wanted the institutions to come in because they would provide liquidity and reliability and stability to the volumes anyway, and also a certain reputation. But this is the price that we pay for that when Bitcoin does start to behave much more like a macro asset. However, we did see a slight change in the equation in that infamous week of May 11th, when the markets became especially turbulent. The correlations went up. All correlations head to 1 in times of a crisis. Since then, they are starting to turn, and it's the why these correlations with traditional assets are turning. That's the particularly interesting story. And the why, you can see that in the correlations between Bitcoin and other crypto assets. Yes, the chart that you're showing shows that beautifully. It shows the correlations between Bitcoin and a coin metrics index of assets that includes 10 leading crypto assets, ex-Bitcoin and ex-stablecoins. As you can see, it reached an all-time high earlier this year at almost 0.94. This is because the institutional investors that we were just talking about tend to bucket crypto assets into the risk category and treat them in a very similar fashion, so they behave in a similar fashion. Then came the week of May the 11th, and that was a very strong outperformance for Bitcoin. Why? Because Bitcoin outperforms in bad markets, underperforms in good markets.
That was during the Terra Luna collapse.
Absolutely. Bitcoin fell, but by less. We're seeing this today, in fact. I don't know if you've noticed that markets are pretty red today. Bitcoin is again outperforming in the bad market that we have today by falling less. After the crash of May 11th and after the dust started to settle, the correlations between Bitcoin and its peers recovered, not to where they were, and now they're sort of holding steady at around 0.9. That's definitely still high, not as high as it was, and that's the interesting story. Bitcoin is separating itself from its peers now because it is seen as the blue chip, because it is seen as the huge air quotes here, Christine, the quality crypto asset.
Mm-hmm. Well, I'm just taking a look at the traditional markets right now. I see the S&P 500 is down about 1.3%. The Dow Jones Industrial Average is down as well, about 0.3%. So what do you see as like the differences between correlations in the traditional markets and other crypto assets?
The correlations between digital assets and other crypto assets, did you say?
And traditional stocks?
Oh, and traditional assets. Where do I think it's going? I think it's going to continue turning. This is something that we've been keeping a very close eye on for time. I think it's going to continue turning for the following reason. The risk investors are leaving the market. In a risk-off environment, they sell their risk holdings, including the Bitcoin that they were holding as a risk asset. They're leaving the market. And as they leave the market, they hand more price-setting control to those investors that see it as a longer-term investment, that see it as a store of value. They have been steadily accumulating all through this weak market that we've had since the beginning of the year. They have been steadily accumulating. And as the risk players exit, more price setting control goes to them. So I fully expect to see the correlation between Bitcoin and traditional assets continue to come down. This will be temporary. It will go back up again as the risk investors start to see that, hey, this is actually an outperforming asset. Let's have some of that. And back it goes into the risk portfolios and up go the correlations again. This is the cyclical nature of the market. We have a lot of ground to cover.
Are we in a crypto winter? When do we start to say that we are in a crypto winter? And I wonder what kind of lessons we learned from previous bear markets that we could learn going forward.
One thing to remember, Christine, is that this bear market is very different from other bear markets. I've seen several of these now, and sure, there are some similarities. We're seeing some of the similarities in the general despair that is across our Twitter feeds these days, but it's a very different bear market in that, one, the institutions now are a significant part of the liquidity, and two, crypto is recognized at the highest levels. Last time we were in the situation, crypto was still very niche. Sure, crypto is still small, but it's no longer insignificant. It's no longer at risk of disappearing. So the crypto winter is going to have a very different feel. In fact, I don't know if you noticed, but a lot of the comments that we've heard since the crash of the week of May 11th have been about, yes, the froth has finally been washed out of the market. Wonderful. There's too much froth in the market. But this is the big difference. The froth was not because of the price. The price of Bitcoin was not doing anything special. Most other crypto assets, given the high correlation that we were talking about just a moment ago, similar, doing some outperformances, but nothing really special. The froth was not in the price. The froth was
from
in
the
the
macroeconomic environment.
Yes, and the froth was in the potential for the industry, the very high valuations that we're seeing on some of the crypto companies, the difficulty in hiring. We all know how this feels. It was not because of the prices, it was because of the potential, which is becoming increasingly recognized on a global scale. That is the big difference between this bear market and previous bear markets. Does that mean that things are going to be all rosy and we're going to bounce back hard from here? There's a lot of negative macro sentiment out there that is still going to weigh heavy on crypto markets, as it should. Things are dicey, but the narratives are becoming more apparent. The crypto narratives, as distinct from the macro narratives, are becoming more apparent. We're seeing the role of Bitcoin at the global stage becoming more obvious to many. We have the ETH merge coming up, which is an entirely different story and is boosting institutional interest in Ether as well. The narratives in a bear market, I'm not just talking about the crypto here, but markets overall, the narratives will become more clear, and that will further the decoupling of the correlations until, of course, the market turns and the risk investors come back in.